This is Kali Persall, editor of Institutional Investing in Infrastructure, and I'm here with Adam Ferrari of Phoenix Capital Group to talk about how oil and gas mergers are shaping the industry and what it means for investors and stakeholders. So before we get started, Adam, can you just give me a brief introduction of yourself and your role at Phoenix Capital?
Yeah, pleasure to be here today. Once again, my name is Adam Ferrari, and I'm the Chief Executive Officer of Phoenix Capital Group Holdings. We've been in business for about 5.5 years, and we are a domestic oil and gas producer. We currently produce around 12,000 BOE per day, a little bit smaller than Conoco and Marathon, but we do play in the same sandbox.
So in May, I understand ConocoPhillips agreed to buy Marathon Oil in an all-stock deal worth $22.5 billion. Just walk me through the impact of deals like these.
Yeah, so this is sort of common in our industry. It's a cyclical industry, as your viewers are probably aware. And during the sort of upward trend in oil prices, you see a lot of merger activity. And this cycle is no different than cycles of past years. So Conoco Marathon was a rather large one, but even prior to that, there was several that were bigger. Chevron bought Hess, I think, in the 50s. Exxon acquired Pioneer. And the Chevron Hess deal was interesting because it had a Bakken component, which we are a large North Dakota oil producer. And both ConocoPhillips and Marathon are also large oil producers in North Dakota. So from our perspective, the market is consolidating. So there's less operators as you go forward with a lot of these mergers. So the Conoco Marathon merger was pretty large in the Bakken. So instead of having two players, now you have one. So when a company like Conoco and Marathon merge, there's a lot of synergies. If I were to show you a map of their acreage, their acreage positions, there's a little bit of overlap, and then it kind of complements each other. So ultimately, when Conoco takes over the Marathon position, I think the net effect is going to be they're going to be more profitable, and they're going to be more efficient, and they're going to produce more barrels at a lower cost. And that's ultimately what drives their stock price, and it drives more investment in the space too. It's going to leave them with more capital to deploy to keep growing their production, which is a pretty big thing. If you're a public oil company, you want to be growing your production because that's your revenue. And so, yeah, I think it's impactful at scale. And there's a lot of them that have happened in the last 12 to 24 months that sort of affirm that trend. There's a lot of companies that are looking to lower their cost and increase their production, and they're doing it through mergers.
Like you said, this is not the only big deal to close in recent months. So I'm just wondering if you can talk a little bit about the strategic importance of mergers and acquisitions.
Just broadly speaking, I think this is sort of a hallmark of the American oil and gas industry because we're known for having a lot of operators, whereas you go around the world and the markets globally are kind of dominated by one or two players in their local marketplace. Whereas in America, I mean, there's hundreds of oil companies from the mom and pops to ExxonMobil. But ultimately, these trends of mergers and acquisitions just lead to more efficiency in the American oil and gas industry. So these mega mergers are happening with companies that do have an international and domestic footprint, but they're using domestic M&A to sort of make their balance sheets better in the long run, which is good for investors. It's good for the overall American energy industry.
Yeah, that makes sense. So M&A activity was a bit subdued. Fundraising closes, a lot of things in the market were kind of on hold, but we're seeing a lot of that activity start to rebound despite the high interest rates and other challenges. What are some of the investment opportunities that you can pinpoint post-merger?
We continue to be bullish on the commodity. I don't think that should surprise any of your viewers. We're in the oil and gas industry and we're bullish on oil. But we always tell our investor base we're agnostic. We've made money in lower price environments and higher. But I think if you look at the landscape today, even with higher interest rates, generally speaking, I think the market is pretty bullish on oil. We're consuming more than we ever have as a species on planet Earth. And I don't see that trend changing anytime soon. And on top of that, the cheapest barrels have already been found and produced. So if you look at where we're going to find the next barrel to be consumed, it's inevitably more expensive. The cost of steel has gone up, cement. So constructing wellbores has gone up. Producing them is, we're really efficient on that side, but the actual construction of new wellbores, the cost is higher. And so we think long-term, there's all kinds of opportunity to deploy capital in areas in the U.S. that were overlooked 10 years ago. For example, Phoenix Capital Group is drilling a part of the Bakken in North Dakota right now. That company, a name you will all recognize, Continental Resources, looked at this area 10 years ago and said, nah, it's not worth it right now. Whereas today you have companies like Kraken, who has an incredible track record, along with Phoenix Capital Group, bringing on significant production in some of these areas. And so I think that is how we view the world. There's an opportunity now to go into areas that had been overlooked previously, where there's known volumes of oil. And we've, with new technology, been able to really efficiently produce those. And that's how we're growing. So we've had a pretty significant growth story. It's a little different than a Conoco Marathon merger. They're growing through buying. We're growing organically through the drill bit. And I see a lot of opportunity to do that at a smaller scale. And that's kind of our focus. And we just see this as a very favorable market for organically building positions and bringing on new barrels.
Absolutely. Thank you. I'd also love to get your thoughts about non-traditional capital raises and how those fit into the bigger picture. Can you speak to that a bit?
Yeah, sure. So oil and gas is very dynamic, and it's an industry that requires a lot of capital. It should be no surprise to your viewers. It's a capitally intensive industry. It takes more than just people. You have to buy a lot of steel, cement, big machinery to sort of bring the resource out of the ground. And funding that has traditionally been dominated by large banks and publicly traded companies through equity offerings. More recently, there's been sort of a trend that we've noticed there's a lot more private equity money in the space today than there was 10 years ago. So the names a lot of your viewers might know, an NCAP, an NGP, Quantum Capital, very big players in the space. But on a smaller scale, you're seeing another trend that we have been the dominant player in, which is private placement capital formation, which is a company like Phoenix that partners with a broker dealer, creates a product, and goes directly to investors with that product. And Phoenix has been doing that now for 4 years. And we've raised about 650 million-ish of capital to deploy into our business. And we have a direct relationship with our investor base. So that's a trend it's new, and we see that as there's a lot of opportunity in that space.
So that's one trend. Are there any other trends in the oil and gas sector as a whole that we should be keeping an eye on?
I'm an engineer by background, so I like to nerd out every once in a while and talk technical. And so we're working on longer laterals. We're not going to be the first to have drilled a 4-mile horizontal well in the United States. There's been some that have been done, but in the Bakken, it's just starting. So in Colorado, in the DJ Basin, there's been a couple of operators that have drilled 4-mile laterals. And so we're going to be pushing that envelope up in North Dakota, hopefully next year. And to me, that's a really important trend. The American oil and gas industry is defined by technological change. And that's how we're able to maintain our efficiency edge over the rest of the world. We push the boundaries here. So we started with 1-mile horizontals with open hole completions. We used to call them Hail Mary frac jobs. And that was, version 1. And then we started getting more complex with the completion. So it wasn't a Hail Mary. Now we did 10 stages, let's say. Well, the next step was a 2-mile lateral. The next step was a 3. The 2-mile to 3-mile step change. There was a lot of observers in the industry that didn't think the economics of the 3-mile were as good as the 2. But if you look today in the Bakken, everywhere where you can drill a 3-miler, people are doing it. And now the next step is, can you drill the 4-miler? So we've ran the economics, and we're convinced that it's more economic to develop acreage on a 4-mile lateral basis than a 3. And there are some technical challenges associated with it. When you get out further in the lateral, it gets a little bit riskier operationally, and things could go wrong. But we're committed to the cause, and that's a trend that to us is really critical, because now you're going to be able to unlock acreage that wasn't accessible economically 4 or 5 years ago. And so it opens up a whole new frontier of exploration where companies can now make a profit developing oil and gas resources where 4 or 5 years ago they couldn't. So in my mind, that's the biggest sort of step change that we're seeing right now in the industry. It's being driven with technical evolution. So the technology to be able to drill 4-mile horizontal wells and complete them efficiently is there today, and it really wasn't 4 years ago, 5 years ago. And so we're excited about that. And like I said, we have acreage today where we're in front of the North Dakota Industrial Commission proposing 4-mile development. And we're going to do more of that. And operators like Kraken, they're doing the same thing. So that's something we're really excited about, because that's the key to unlocking more value in the American oil and gas industry. And I think whoever can perfect that the soonest, their shareholders will be rewarded for it.
Great. Well, those are certainly interesting things to keep an eye on. Thank you so much for joining me and sharing your insights today. It was a pleasure speaking with you.
Yeah, it was a pleasure speaking with you too. I wish you all the best.